Okay, great.
Yeah, I can hear you. All good, all good. Hey,
Perfect. Okay, perfect.
perfect.
Yeah, again, so this space is possible. Is has been sponsored by MarginX, which is also the host here. So, folks, please do give MarginX a follow and like. MarginX is a new perpetual DEX available in the market. They haven't issued the token yet, so please do follow MarginX for more alpha opportunities. Okay, great. So let's get started. Okay, everyone, welcome to the first episode of my new Twitter Space series, DeFi Weekly. So DeFi Weekly is my new show. Effectively, it's talking about DeFi on weekly basis. So our first DeFi Weekly, first episode, is actually about a very hardcore topic, which is perpetual DEX. Um, so we dedicate ourselves to DeFi, new trends, new protocols, new products, but apparently we picked the most difficult one to start with, which is perpetual DEX. So our guests today are actually very, very big shots in the perpetual DEX space. They have done a lot of research in the perps, they have done a lot of research in the DeFi space. They have a lot of experience in the DeFi protocols and all that. So without further ado, so let's start by having our guests introduce themselves as well as what they are working on. Okay, maybe we can start with Finish.
Yeah, for sure. Can you guys hear me?
Yeah, perfect. Yes.
Yeah, amazing. Yeah, so pleasure to meet everyone. Thanks a lot for hosting. Thanks, Marginix and Jonathan Zhao. I'm Finnish, mainly focused on DeFi, just discovering different topics. Yeah, so basically perpetual DEXs, LSDeFi, LWAs, like everything possible, and just write on Twitter. And also BD at Volca. And basically, one of my main responsibilities is just to kind of connect with other people and discuss the perpetual DEXs and how we could collaborate or build different strategies. So across the call, I will just try to chill with the vodka a bit, what we do, etc. But I guess it's fine. Thank you, guys.
Okay, great, great. Yeah, we can talk a lot about Volca later. I have a lot of questions about Volca and how it's relevant to the perp industry these days. But we can save that questions for later. Maybe DeFi made here.
Hi everyone. I didn't hear the question, but I assume you want me to introduce myself, right?
Yes, yes. Just a quick introduction of yourself, how you're getting crypto, and what you're working on now.
I got into crypto because I wanted to change my occupation, and then I didn't know what to do. Then I started studying crypto, and after a few years, after I started studying crypto, I decided to switch to DeFi because I heard, okay, there is a thing called DeFi, and people can like use it as a bank and some stuff. And then I started studying DeFi, and then at one moment I decided, okay, let's start a Twitter account. And I didn't have any social medias before, so that was my first experience. And I started writing things, and people loved it and started following me. I started working in investment fund and things like that. And yeah, sharing some of my thoughts, ideas, and views on the market.
Oh, that's awesome. That's awesome. So you mentioned you want to change your occupation. So what was your job before doing crypto?
I was in like oil and gas industry, and let's say I didn't like what I was doing because I was always away from home. Uh,
Uh-huh.
yeah, and actually, you know what happened because of that COVID thing? Uh, all the airports, everything got shut, and I got stuck like away. And I thought, okay, I don't want to do this anymore. So when after like 11 months, I was able to come back home. I quit my job, and I was just studying crypto for some time. I mean, like for more than 1 year. I mean, I didn't buy any crypto. I was just studying, uh, and maybe after 1.5 year, I started trading or something like that. Maybe after 1 year. my first attempt, and then slowly, I mean, because I wasn't working, I had a lot of time to spend everything to spend it for studying, and yeah, that helped me. That's the time available helped me to understand the things. And then when I started studying DeFi, it took me very fast to understand things as well. So now it's my full-time thing since some time ago. Yeah, that's all.
Oh, that's really cool. That's really cool. I know a lot of my friends, they actually, get into crypto industry during the COVID, during the pandemic, during that 3 years. So a lot of people like switch jobs from, full-time on-site, on-desk job to global remote digital nomad crypto jobs. I've seen a lot of friends doing that. So that's really cool. And I'm sure that a lot of audience here, they have learned a lot from you in terms of all these alpha ideas, how you analyze projects, how you look at DeFi projects and all that. It has been at least very, very helpful for me. So that's why it has been a great honor to get both of the guests on the platform on the channel today. So yeah, maybe let me just quickly introduce myself as well. My ID, apparently I go by Gentleman Zhao, but I usually, in the real life, people call me Raymond. So I'm running a crypto hedge fund now. Our strategy is basically long short crypto tokens, which are usually altcoins. So the altcoins are not necessarily shit coins. I like to call them blue chip coins for the future technology giants. Okay, so I like to buy these coins in the early stage, and in the hope that they do deliver sustainable growth, very strong performance, and then the bull market will eventually unleash, or I guess to fully unleash all the potential of this protocol. So that's kind of our strategy. So and I also do a lot of things, sharing a lot of things on Twitter, doing my podcast here and there. But my day-to-day job, I guess my hobby is to find alpha opportunities. And perpetual DEX is the number one sector I pay attention to. So I'm extremely happy and excited to share my views and my questions with all the guests here. Yeah. So maybe let me start with number one question. So maybe we can start with the finish and to DeFi make here. So my first question is, so perpetual DEX apparently is a very important sector, but what's the real problem here that they are trying to solve? What exactly is the pain point from the end users, and what's the Perp DEX trying to achieve here? Yeah, maybe we can start with finish.
Yeah, sure. So basically, are we currently talking about the difference between SEX and DEX, or just overall, like what perpetual trading brings to people? Just to fully understand the question.
Yeah. So basically, I think we were talking about like GMX, GNS. These are the decentralized perpetual DEX. Yeah. So instead of for Binance, okay, will be these are the centralized exchange perps, and we're talking about the decentralized one. Yeah.
Yeah, for sure. So I guess it's kind of started after the Arbitrum went live or FTX crash, and basically people just understood that those SEXs which are like fully custodial and have like full ownership of your funds, they're not that safe and they're not transparent anymore, and you can't really trust them. And that's how basically with I would say growth and development of layer 2s like Arbitrum or Optimism, the project kind of gets an opportunity to build further, because we had some DEXs on Ethereum, but there is like not a chance that you could build something fast with like good enough finality or cheap enough transactions on Ethereum. That's why like L2s were so important. And basically the main problems perpetual DEX kind of solve is like first for probably they're not custodial, so basically you have full ownership of your funds, they're fully transparent, everything is on blockchain, they're cheap. If you're talking about big ones like DeFi or GMX, they have enough liquidity, you have enough pairs to trade. If you're talking about Apollo X, you can go about 150x leverage, so you can like truly judge. So I guess like those are the main benefits, and like you don't really, you're not really afraid about your assets. Like you fully know that like perpetual DEX, like they audited, they're safe, they've proven themselves. And basically, there's just if you can kind of solve the gap between like UX between sectors and DEXs, then I honestly don't see any points in using sectors anymore.
I see. So self-custody is a very important factor. So DeFi here, what do you think?
Same thing for me, to be honest. I think like the main reason why people switch to DEX, like initially, like everyone, I was using Sexes, and when I started using DeFi, it was a little bit like not very convenient, awkward, like how to use DeFi. But when I got used to it, like returning back to Sexes for me is, I mean, I don't like it at all. Within DeFi, it's very easy. You have your money with you, and you can connect to any DEX you like, trade any tokens whatsoever. But if you want to change to trade on different sex, like you need to. There is a onboarding process which takes time. It takes more time, first of all, and second thing, like I remember I wanted to like buy a coin something on one sex. I transferred the money. I bought the coin, then I sold it after some time, and then I wanted to withdraw the money, but they thought, okay, now you do KYC to withdraw. Like, oh my god. So they accepted my deposit, but they didn't accept the withdrawal. So all the things, it's much easier, much more convenient to use DeFi in this. And safer. Of course, there is another layer of risk in DeFi. First of all, self-custody comes with risk, because not all of us follow the best practices when we are interacting with our wallets and so on. And also there is a smart contract risk. Okay, this is something we have to account when interacting with DeFi, but otherwise I prefer now DeFi than Sexes.
Yeah, cool. So like full ownership of your assets, avoid all the trouble of KYC, avoid all the difficult administrative burden from the CeFi for centralized exchange. I think definitely that's a very important factor when we use DeFi Perp DEX. So, but do you guys really think self custody is an important feature, or self custody is a real problem or real issue here? Because if it's a real issue, why wouldn't people just jump from Binance to GMX today, right? Is decentralization or self custody maybe just our ideological pursuit, instead of a real problem that we need to solve? What do you guys think? Maybe we start with Finish.
Yeah, it's actually a great question, and yeah, I think it's something ideological we have, that we basically all aimed like to go fully, like not to do KYC, etc. But I guess Texas still have some rooms there, for example, like for institutions, or like there is still some level of trust to big sectors like Binance or Bybit, etc. And basically, if you KYC it and the sector is regulated, then obviously it's very unusual that you will have like problems accessing funds. So I wouldn't necessarily say like QCing is bad, but it just gives you more freedom. And as like DeFi mentioned that he deposited a coin, sold it, and then when he wanted to kind of withdraw the funds, he needed to do a KYC. Like it won't happen on perpetual DEX. It's not possible. But overall, I guess like probably like you have a big volume, or you just you're an institution and like you need a better overview of your funds. Then obviously like SEX has like certain advantages here. But overall, I'm still keen more on the non-KYC kind of path.
Yeah. Now quite see. Yes. So okay. So DeFi here, what do you think? Do you think this is do you think like decentralization? I know you mentioned that you like self custody more, but do you think this is actually a real problem for the mass adoption, or maybe for like massive users?
I guess not everyone realizing what are the benefits of self-custody. But as I said before, self-custody comes with some other external risks, and probably not all people are ready to bear these risks. So they say, okay, I believe this particular exchange, centralized exchange, it's easier for me to keep money over there. I personally I hold money on Sexes as well. Like I try to hold like on both on DeFi and on Sexes, because again, like you can get exploited. I mean, you can get compromised, or protocol can get exploited, or whatever, and you will lose money. Or an exchange can do an FTX thing, and you also lose your money. So I try to, let's say, diversify, but also self-custody is not very easy, not for the newbies, let's say, and
Yeah.
Later on, when like self-custody will be easier, like even now this account abstraction thing, and onboarding with with your socials, with your email, like creating wallets, it will bring more people on chain, and then probably there will be easier ways, like safer ways to keep your seeds, or I mean like to keep your money safe. And also I guess like we're in the earliest stage of DeFi, but later on everything will be KYC, and then they will create some blockchains where you can revert the transaction. So if something is stolen, they will just revert it. And even now, like USDC, they get frozen if you stole the money and you didn't exchange them fast, they will freeze your account, freeze your USDT in your wallet and stuff like that. So later on, it will be easier and safer for people to to do self-custody.
Yeah, absolutely great. Okay, so self-custody, right? A lot of customers, a lot of users actually don't have, that level of tech know-how to actually protect their own assets. They need to, constantly look out for potential phishing risk, hacking risk, and all different things. So it's actually quite challenging for average users to maintain their to make sure that they have the full ownership of the assets. It's actually a very difficult task technology-wise. So it's actually quite challenging. So I'm sure that going forward we'll have a lot of other solutions to make this more user-friendly. But at this juncture, I think we have a lot more work to do. Yeah, maybe I can share some stats here. Right? So how big is the market here? I'm actually looking at one of the presentation from Vertex the other day, and so basically the according to the Vertex presentation, it's basically saying that for last year, the derivative trading and basically just perps, the annual volume for decentralized exchange annual volume is actually 367 billion. So basically 1 billion a day for decentralized perps. But for centralized ones, for the CeFi ones, so the total volume is actually 85,306 billion. So that's actually 232 times bigger than the DeFi perps. So this is the number from Vertex. I'm not sure how true it is, but I do agree with the magnitude at least. The DeFi perps is actually way smaller than the CeFi perps space in terms of the total volume traded over the last 12 months, right? And maybe for the year before, definitely. So we talk a lot of things about the CeFi perps and DeFi perps, especially the advantage of the DeFi perps. So what are the top advantage of the CeFi perps like Binance, Bybit, or Bitgate? Well, what do you think is the key feature that give them this much market share? So what do you guys think? Maybe we can start with Finish.
Yeah, for sure. I think it's a great thing to mention that basically the perpetual DEXs are still much smaller compared to Sexes. But as mentioned before, Huh?
Very young, very early stage. Yeah.
Yeah, they're fairly early as Arbitrum optimism, like were launched not that late, but I guess like there are still big funds or big institutional investors that just, I don't know, they just probably used to Binance, to Bybit, to OKX, to others. They probably have like lower fees, which is basically like one of the advantages of CEXs. Like if your volume is hundreds of millions, I guess you could just get some kind of VIP status and just pay way less compared to perpetual DEXs where you don't have this kind of an opportunity. Furthermore, I guess it's just more liquidity is there. So basically, like the more you trade, the more liquidity you need. And yeah, obviously, like GMX or DYDX or like synthetics, they try to like they're doing their best to kind of provide as much liquidity as possible. But I guess it's still not enough, and we will just see in future years how it will kind of evolve and how liquidity will kind of flow from the DEXs to DEXs. And that's actually what we're aiming to do at Volca. It's basically we try to be a catalyst for perpetual DEXs. We try to build those strategies where people can kind of invest in LP tokens for perpetual DEXs and get the best returns on them, and basically still provide the liquidity for a ton of perpetual DEXs. Like we work with Gains, with Vela, with GMX, GLP, and version 2 pairs. Yeah, so it's basically one of my main focuses from our side. And it's just how we can empower, for example, like the whole perpetual DEXs. And currently, for example, if we talk about Vela, we currently hold about like 23% of that TVL, and we just aiming to grow the numbers for other perpetual DEXs, and just that's kind of the way you could see more liquidity in perpetual DEXs in the future through Volca. Guys, you here?
Yeah. Sorry, I mute myself. Okay. I was saying yes. So more liquidity available on the CeFi perps is very important. So Volca is actually bridging the gap. So Volca is actually providing more liquidity from all the different investors to different perp DEX available here and there. So very important liquidity provider. And maybe DeFi Mac here. What do you think? What do you think are the big advantage of CeFi over DeFi in terms of in the perp space?
First of all, they were early, and they experienced several bull markets when people were like the most active, and they were exploring crypto space. So these exchanges, they took all those users, and they have multi-billion budgets for marketing, for improving UI, for onboarding more liquidity providers, and so on. So all the things, they will matter. But slowly, I think more and more users will be switching to the DEXs just because of the safety and not the safety, but because of this, self-custody things that they don't need to keep money on the CEXs. Even now you can see that whales, they deposit money to the centralized exchange, they buy the coin, then they withdraw everything, then they deposit those coins back to exchange, they sell it and withdraw them like USDT, USDC, whatever. And they don't keep their money on CEXs. And if they don't want to keep their money, why would they keep using it when there is more liquidity available on DEXs? They can just trade there, and they always keep money and funds with them.
Yeah, definitely. I think a lot of the UI UX improvements and the technology improvement to make the entire custodian experience, self-custody experience more effective and more useful. That's definitely the key. And maybe I just have a few things to add myself to. So I actually think Perp DEX is very competitive, and we are seeing that some of the Perp DEX actually doing better than their CeFi counterparts. They're actually doing better than Binance or Bybit, for example. The way they do this is, number one, they actually provide much higher leverage. So I remember the highest leverage available on Apollo X was actually 500 times. So I believe that number is actually higher than what's available on the Binance exchange. So that's actually very high leverage. And number two, we are seeing that some of these Vertex, for example, Vertex or Quanta, I believe one of them, actually provide some pairs. When Pepe was launched a few months back, so they actually provide the new pair for Pepe, the perpetual pair for Pepe. So that was actually a few months back. So that's actually very quite interesting, quite impressive, because I believe back then not that many CFA exchange actually provide that pair. So apparently very interesting, new assets you can trade on. So I think
This space was downloaded via spacesdown.com. Visit to download your spaces today.
DeFi Perp DEX actually trying different things to make them more competitive. So and against the CFI Perp guys. So that's definitely very important. Maybe I just want to ask one number question. Right? You don't need to give me details. I know it's just a blind guess, but what do you think it's going to be the final market share or market share split between the CFI and DeFi guys in the perps landscape? Do you think it's going to be, I don't know, because today it's like 10-20%, right? It's not very massive. But do you think it's going to be like 50%, 70%, or what's the split? What do you think?
Well, it's actually a great question, and I guess in the future we'll kind of see how it evolves. But overall, I think we could probably see somewhere about like 20-30% in the upcoming like maybe 3-4 years. Because obviously, I think as DeFi mentioned, like those big kind of investors are just deposit money. They kind of buy a token, sell a token, pump it, dump it, etc. Just market make it, and then just withdraw. And that's why like they wouldn't probably like provide liquidity for perpetual DEXs, and this could probably change in the future. And that's why we could see just overall like just this natural flow of the liquidity from CEXs to DEXs. And I guess that would be just it. But it's kind of hard to predict because like if everything kind of stays stable in terms of the CEXs, like if Binance and Bybit and others big players can just sustain the levels and just provide services they provide without like any big issues, obviously the transition would be way longer.
Yeah, still ongoing game. So what do you think, if I may hear?
First of all, I think that actual share is like around 2% of Perp DEXs. And yeah, I mean, it will be growing. You can see how many protocols are launching like almost daily or weekly.
Yeah.
And behind those projects, there's not like NL devs doing something, but there are big companies and big VCs which are behind these projects, including like Binance is like investing in some of the Perp DEXs. So I pretty much expect that sooner or later the share will grow significantly, and maybe one day it will surpass. And actually, nothing stops Binance, from moving on chain. Also, Binance doesn't hold money somewhere in some magical chest. Binance is holding money on chain as well. Yeah. And they just need to remove the centralized matching engine, but to make it decentralized, and users will be able, to interact also on chain. But yeah, so like sooner or later, things will be going on chain. I believe in that.
Yeah. Okay. No, absolutely. So what I'm hearing is, wow. So it's actually a very dynamic game, right? So the CFI guys actually may join the DeFi game as well. Binance may launch their Perp DEX if they want to, right? So it's a very dynamic game. The different players coming into this space, and every day we are seeing that new, very innovative Perp DEX popping up here and there. So it's actually very dynamic and very interesting game. Yeah. Before we move to the next question, I just want to remind all the audience here that so this show is available because we are sponsored by the MarginX, And please do share this Twitter space with your friends who are interested in DeFi, as well as a DeFi perpetual DEX. So we're gonna have more interesting questions coming up to talk about how we should evaluate different perp DEX. Yeah, as the guest just mentioned, we are actually seeing a lot of new things, new protocols every day. So the competition is actually quite serious, right? So my question for the two guests here is that when we look at these new projects, we want to invest in them, or we want to work on them, we want to work with them, right? So what are the top factors for you to consider when you evaluate a new perp DEX? Maybe we can start with Finish.
Yeah, I guess it's a great question. And regarding the perp DEX, I think like the main point here is probably the community, because the community is what forms the project itself, not just the perpetual DEX, but overall. And just if you even like take a look at Arbitrum and like the size of its like perpetual DEX trading community, or if you talk about GMX, like how huge it is and how many supporters it is, and even like an amount of whales they kind of been able to attract during like the last couple of months with the recent like V2 migration. So I guess probably like the first thing I take a look is a community, if it's active, if it's decent, if I see like familiar faces there, and obviously the project is worth it, and it was taking a look. Furthermore, I guess like the new features also important, as like there's a ton of like, I don't know, like GMX forks or like forks of other projects which are like super similar, and if they don't really bring anything new to the space, if they don't kind of try to innovate it, to evolve it, then basically like they don't really provide any value, and like what's the point of using them? Like they can, I don't know, they can have like lower fees or some other stuff, but it doesn't really matter, because you wouldn't really switch like from GMX to some other like small perpetual DEX if like fees were lower, etc. Because obviously GMX has its own advantages. And probably the third one I need to mention is the security, because as we were talking about like difference between sexes and DEXs, like that perpetual DEXs are not custodial. It's super important. But on the other side, you kind of need to make sure that like the contracts are secure, funds are secure, and it's basically like users would feel comfortable providing liquidity or some other stuff, because obviously like if the contract gets drained, then they will lose everything. And like here is like the situation from two sides, basically like sex, they are like controlled, or they can just, I don't know, go the FTX way and also lose funds. Or if we're talking about like something which is built through smart contracts, also has a risk that it just can be hacked and the funds can be stolen. So it's also, I think, one of the most, and GMX is probably like one of the best examples here, as like they did a ton of audits, as they did like code for in, as they did private stuff. They also worked with solo auditors, and they just like fully aiming to bring the best product here, so people would feel kind of safe to trust the money. And I think it's like the audits are still ongoing, because they have recently integrated Chainlink oracles, which is also kind of like it's revolutionary, but it must be also audited, because it's like something new to the space. And that's why they like, I think if you're talking about like security example, GMX is definitely the one.
Yeah, 100%. Yeah, 100%. So DeFi Maker, what do you think? So when you look at new projects, what do you think?
First of all, I always check if the project is not a fork, because I remember when GMX was like initially very popular, and there were like seasonal GMX forks, and people were buying all the crap tokens and losing everything. I mean, I have zero interest in any fork protocol. Even, I mean, unless there are like very, very big differences from the original protocol, because when Level launched, and that was GMX fork, but with like several LP like liquidity pools, I was so like criticizing a little of them, and a lot of people were sharing their token, while I was saying that it will go to zero, and look, guess who is right. Yeah, so first of all, I need to see like if there is any, like not exactly innovation, but at least it's not a fork, and like it's different from others. And community is also a very good point, because again, like DMX is a very good example of everything. Like if you remember, like back then, everyone had a GMX raffling, yeah, because GMX had very high fees, and there were not so many places to trade on, so everyone was sharing GMX referral links, and like no, those people weren't trading there, but they were sharing the links because they were holding the token. More people trading, token goes up. So community really makes a difference, and yeah, like you were saying about investing in the projects. Of course, like I'm checking how real is the volume, if the volume is incentivized, how many users on the platform and stuff like that. So a lot of things to consider, but the very first thing I'm checking if it's not a fork, then like what they do different. Community is important, yeah, and how real are the users on the platform, and yeah, stuff like that.
Cool. Yeah, that's fair. Okay, so just to summarize it, so the for number one, I think is the community. Community is very important. Community is actually apparently it's it's whether it's token holders or people who participate in the trades, or maybe some big whales like Andrew Can, Andrew Can for GMX, for example. The community is actually very important. So that actually dictates how many people will join the Perp DEX to trade more. Number one, or maybe how many people will actually buy the tokens to support the token price. I think this community is number one important feature. And both guests mentioned that the new features, innovation, super important. I actually ping some threads I wrote before. One is for Vertex, the other one is for HMX. So previously, I look at all these Perp DEX. So HMX at this has something different because they kind of level up on GLP. So HMX's liquidity pool, HLP, is actually built on GLP. So something that is not exactly a fork, but kind of like fork with a little bit innovation in terms of how they use the liquidity pool. So that's something I kind of at least kind of appreciate. But then if it was just purely subsidized transactions, then I don't appreciate this as much. So that's why I wrote another one for the Vertex one, because the Vertex apparently has been subsidizing a lot of transactions, a lot of small notional transactions for the last few months, and now everyone is waiting for the TGE to come up in just maybe 2 or 3 days. So I think that's the part about the subsidies and all that. Now, of course, there are different models here and there. Self-custody, Oracle, different tailored Oracle, user UX experience, all the things will be different. So that's how I would look at this competition as well. But yeah, do you want to add anything? Yeah.
HMX for me, the biggest mistake that they just went to the next letter in the alphabet after G, and they named the protocol like HMX instead of GMX, and everyone is thinking that it's a fork. It's not exactly a fork. It's not.
Exactly.
It's very similar, and it's leveraging GMX, but because of the name, like everyone is thinking it's a fork, we should just use the next letter in the alphabet.
Yeah.
Which I think that's quite a mistake from them, and yeah, like I don't. And also they have very incentivized volume, or this happy, and everyone thinks it's a fork, and it's sort of fork. I mean, not exactly, but similar thing. So I think that was a mistake from their side. And Vertex, yeah, I mean, like purely incentivized volume, heavily incentivized volume towards TGE. I think they have some crazy valuation now at TGE. It's 700 million and stuff. And I mean, they're playing.
Wait, 700? 700 million for
Yeah,
TGE?
for LBP. For LBP, FDV is 700 million, or it was 800 million.
Wow, that's okay. That's
Yeah,
a big number.
That's a very big number. I think, was it 5 million already deposited, 5 million USDC? So I don't know what people are doing, but okay, that's their money. But Vertex is paying the DeFi DEX books very cheap fees. You incentivize volume with their own coin, and I don't know why people would invest in it, but maybe they know better than me. They find the 700 million valuation is fair for them, but let's see how it goes.
Well, people just have too much money to spend. That's probably why. Okay, so I think I previously did math on the Vertex token thing. So I think people are, whatever the market maker who are subsidized to do this, they're actually doing this at roughly 65 to 130 million FDV. So if it's 700 million, that's way above the cost. So that's a crazy number. I know for sure that actually I know for sure that they were asking a lot of venture capital to buy Vertex token at 300 million FDV, and there was no taker at all. So I know market has changed a little bit over the last 1 month. Actually changed dramatically the last 1 month, but I do not think that's a 700 FDV justify.
Yeah, it's now 690 million FDV right now. 2 days before LBP, before the finish of the LBP, it's 690 million. And
Okay,
5.2 million USDC raised.
Okay, I see. I definitely will sell that token on the first day. That's a very crazy valuation. Okay. Again, so this Twitter space is mainly just a theoretical discussion about perpetual DEX. So we're gonna focus on the product development and also the different product and different business designs and all that. We do not provide financial advice. Please do your own research before you're investing any crypto assets. Crypto assets are highly volatile, and we do not suggest or advise you to buy anything unless you do your own research. Okay, so let's move on. So we touch upon a few very juicy facts about the Perp DEX. Maybe let's touch one very theoretical and maybe high level question about the solution for Perp DEX. Okay, so there are basically two camps here. One camp is people who are just doing market maker, the old school market maker. I have a lot of friends told me that a market maker is the most efficient way, is the way to go and all that. But then there's another group who are actually doing the peer-to-pool model, which is most like GMX model. You have a liquidity provider as a pool to trade against the perp traders. So we have two models. One is the order book model. You need a market maker. The other one is the pool model. You need the liquidity providers. So these two models are actually fighting with each other. We are seeing DYDX versus GMX, Vertex versus HMX, for example. I just want to pick you guys' brain. So what do you think? Which one is better? Which one do you like more? Maybe we start with Finish.
Oh yeah, sure. Yeah, I think it's a great question, and we kind of compare them. Basically, I think what DeFi DEX is basically went the way as like what CEXes do, like what Binance or OKX do, and they basically wanted just to have kind of a similar user experience and just went with order book. But I think like from time to time we mainly see perpetual DEX launching with pool models like GMX does, and what HMX did, or Vela or others. Like some of them could be like fully in USDC settled, like I don't know, like Vela for example, or others could be like pool models like GMX does, like it's a GLP where you have like a basket of assets, or it's like GMV2 pairs where you have like a pair of like ETH USDC or BTC USDC. And honestly, I think it's much more straightforward here if you're talking about a pool model, because basically the pool just trades against you, against the trader, and it's just super clear, super transparent. Like, and on other hand, if you're talking about DeFi DEX, you need a market maker. It's super complicated. If you're like, I don't know, if you're not a big project, if you're not a big like perpetual DEX, it could be expensive. So that's why I think pool model has probably like some more advantage. Like probably like the only one order book offers is just familiarity. Like basically, if you switch from Binance to a DeFi DEX, you don't really see much of a difference compared to GMX. But I think even for Volca, it's much more easier. It's much more just I don't know. Just overall makes much more sense building those strategies on pool model, because you can easily like see the token price of the pool, you can see the liquidity, you can see like the TVL. You don't really like see this like not transparent market makers who like have different orders and so on. And that's why we are mainly building on pool models. And honestly, I didn't even discover much about order book. Like I know they exist, but overall it's super straightforward, and we don't really see like any probably like disadvantages of pool models. And that's why I think probably like would be the best solution here for the perpetual DEXs.
Oh, that's awesome. So okay, so the DeFi maker, what do you think?
There's a problem with pool DEXs that actually they need order book DEXs to exist, yeah, because pool DEXs they rely on oracles, and they take oracles from they take the prices from the order book DEXs and or sexes. So like pool like liquidity pool based DEXs, they're limited in a lot of things. Of course, it's like much easier to launch with an LP based DEX, because I mean you don't need anything. You just have an oracle which is tracking like the most liquid source, which is Binance, and that's all. Nothing to do here. Then you add a lot of fees, so your liquidity providers don't get wrecked, and easy business model. But LP-based DEXs, they do not offer anything. They don't offer price discovery. They do not offer. They cannot exist themselves. They cannot list any token unless it has like deep liquidity from somewhere, from where they can take the feed, the price feed. And also LP based, for example, GMX V1, this liquidity is always mispriced. Like 0.1% fee to open and 0.1% to close is not fair for small traders. For small traders, because this liquidity becomes very expensive. But it's also not fair for liquidity providers when big traders are trading against them, because if big traders with 100 million size opens and trade and has no slippage, but pays only 1.1% fee for this liquidity, it's super cheap for him. That's why Andrew Kant was trading there, because like for him is it's obviously the best option to trade over there. So in this case, liquidity providers, they can get a little wrecked, yeah, if he wins, and he only paid 0.1% for that. That's super cheap liquidity for him. And what I'm saying, liquidity is always mispriced, and so like I'm not the biggest fan of LP based model. It's it's very efficient and very easy to plug and launch, let's say, but it's not great in my opinion. But there are projects which are launching more sophisticated LP based models, where they have like dynamic fees, where liquidity is very cheap if you take on a little, and becomes expensive if you take more, and stuff like that. But it's not GMX V1 or even V2. V2 is actually, GMX V2 and Synthetics, they're moving in the right directions. They make their liquidity providers data neutral by incentivizing same amount of open interest on longs and shorts. In this way, they keep the liquidity providers data neutral, and this is this is how they allow much lower fees, and at the same time it's much safer for liquidity providers. But still, you don't have this price discovery, and still you need an order book, DEX or SEX, from where you will take the price feeds. So I think that LP-based protocols, they cannot lead the market. Yeah, they always follow.
Yeah, absolutely. Well, this is actually very, very interesting debate. So maybe I just want to share my 2 cents, right? So, and before that, okay, we have heard from the guests here that if we look at it from the participants' side, it's actually quite difficult to become a professional market maker because you have Jump, you have JameStray, you have Tower, you have all different Wall Street guys, doing all this market making thing for decades, right? They are more experienced. So it's difficult to become a market maker on the order book side, right? So, but it's very, very easy to become a liquidity provider on the pool model, on the GMX. My mom can easily, become a GLP. So that's from the participant side, that's a big difference. But for the trader side, it's such a different. And of course, we are looking at DYDX may have better pricing or may have better liquidity and all that, but GMX has zero or very minimum slippage, right? As our guest just mentioned here, the slippage was actually was made possible because of the Oracle that they use. So maybe there was another example. I definitely want to quote this example here is Apollo X. So Apollo X, I'm sorry that we couldn't get Apollo X on this Twitter space today, but they should be the best person to answer this question. Apollo X is actually a Perp DEX that it was kind of a spin-off team from Binance. They were previously the futures team of Binance. They started the Perp DEX on BNB as order book V1. Okay, and the V2 they switched to the GMX model. So I really wonder why did they make that decision? Because they came from a Binance background. They know more. They know more market makers than anyone else combined. And why did they still switch from the order book model to the pool model? That's actually very, very interesting, right? And if we look at the GMX V2 update, I think this is actually a big improvement from V1 for sure. A lot of improvements here and there, very, very important, but it's still based on the same direction pool model. So they're still doing the pool model thing and going forward. I think they are trying to solve one problem here. Is trying to make this as permissionless as possible. So instead of lumping all assets into one asset pool, they have segregated pools for different assets. So now they have ETH pool, BTC pool, and going forward they're gonna have maybe a Solana pool, maybe like Ruby pool, Curve pool. They have all other pools possible. So I think that's the general direction a lot of other protocols are trying to make this permissionless. But apparently there are other things, other issues associated as well. Yeah. So do you want to add anything?
Actually, I think the GMX V2 is a step in the right direction, but I don't really like the execution. I think that segregated liquidity is not the best decision, seems to me. I mean, okay, most people are trading on ETH BTC, but still, segregated pools, segregated liquidity is worse for them and for liquidity providers. If you check, okay, Synthetics is not the best example because Synthetics is they have the worst source of liquidity you can ever imagine.
Yeah,
like the native token, and it's not scalable at all. Like the worst design you can only imagine, but they also want to move from it. But if you look at what is the name, Gains, okay, they just liquidity pool is based on DAI, and everyone can simply provide DAI, and any market is possible. And some other protocols, I think, Well is doing this, and but they use USDC. So you can characterize all markets with the same same source of liquidity, like DAI or USDC, and you don't need to segregate markets and segregate liquidity like GMX did. I think that's, I don't know, not the best decision. And for them, like launching new pairs is very difficult because for every new pair they need new liquidity pool and new liquidity providers. So for them it's much more difficult. Also, like Hyperliquid, they also have this HLP which consists of USDC only. So they were launching this Friend-Tech index and any shitcoin possible, which was not even live yet. But hey, they can do that because they have single source of liquidity, which is not possible for GMX.
Yeah, exactly. Yeah, that's actually a very good point. Yeah. So, well, to echo your point, I think synthetics is probably the worst because the capital efficiency is just lower. I think it's just it's two directions, right? Someone is trying to make this safe, try to make this liquidation easier, or like so the efficiency is not as high, and someone is trying to level up and try to improve the capital efficiency and try to make the leverage higher. So I think it's just two different directions, as we can see today. Okay. So that's cool. So and what I actually strongly suggest the guys to check out the Volca protocol, because Volca is actually a protocol that is focused on the pool model. So the way they do this is that they will actually you become a depositor of the many different vaults, so you can level up to buy GLP, HLP, or different things. So improve your return on the pool model for the underlying perpetual protocol. It could be GMX, it could be HMX, it could be anything. So that's actually a very interesting protocol, and you guys definitely should check out. Yeah, and let's go to our last question. So okay, so all this business, all these innovations eventually come down to the team that actually executed, right? So so who do you think is the best team in the perpetual DEX industry, and why? Yeah, are they capable? Are they like passionate about perps, or are they trustworthy? Have they done a lot of things to earn your trust? Or maybe it's just 100% trustless, right? It could be either way. So I just want to just get you guys, because I'm sure you guys talk to a lot of protocols here and there. So what do you guys think? Which one is the best team?
I will take this question. I don't know. I don't know which team. I don't know each team member. I cannot answer this question. Actually, I appreciate all the builders, everyone who is building and not rugging and not only forking. I appreciate all builders, but I don't know who is the best or the worst.
So basically, the question is about like which team is the best in terms of perpetual DEXs, or?
Yep.
I mean, I agree here with FMate. Here. That it's we don't really know anyone, and it's just hard to root. Like obviously, I could root for Volker because I know like the team, the people I'm working with, but it wouldn't be a real opinion because obviously I'm kind of I'm biased in terms of that I just work there, and that's why I just like the team, etc. Overall, I don't know, just maybe positive vibes about the GMX. I think DeFi here also mentioned, and myself, like the things they do with community, with security, with just overall TVL building, etc. Huge success. I guess also Synthetics did a pretty great job on optimism, and with Quanta. Yeah, so also kudos to them. But overall, it's really hard to answer.
Yeah, it is. So it's still a very different game, and we're still early in the game. Well, we're seeing a lot of new protocols coming up, so it's very interesting, right? And I'd like to echo what DeFi here just mentioned. It's very interesting game. We're seeing new players emerging every day, and as long as they're not just purely forking someone else's work, as long as they have some new innovation, that definitely deserve our respect, and we should definitely look into it, do more research, understand these tokens, and find these alphas. So yeah, very important. Okay, so I don't really have a personal pick, but yes, agree with the principle right? Just find someone who can innovate. But I generally believe people who can innovate to become more decentralized, to become more friendly self-custody, or people who can make it more efficient and permissionless will be my final pick. Yeah, so I'm sure that a lot of teams, a lot of new protocols are working along that line. And I'm very happy to speak to any of these protocols. If there's anyone in the audience that have these protocols, please do send them my way. I'm very happy to take a look. Yeah. Okay. And before we just wrap up, so any final words from our guests on what you guys are working on? Any new updates? Okay, great. So I guess that's it. So please make sure that. Oh, sorry. Finish. You
No,
want to say
no,
something?
I was just waiting. Probably like I saw definitely here, but we just start. Yeah, I guess as an ending word, thanks everyone for participating. Was a great spaces. Gentleman Zhao, thanks for the questions. Thanks MarginX for supporting the spaces. And I guess it's just an awesome idea, just discussing with different DeFi ideas and just kind of exploring like the spaces. Like, and it's great that we started with perpetual DEXs. And thanks for the invite one more time. And yeah, thank you for listening. Cheers.
Okay. Thank you. Great. Okay. So guys, please do make sure that you follow DeFi Make here, Finish, and MarginX, and me as well. So we're gonna do this on a weekly basis. Today is our episode 1 of DeFi Weekly. We're gonna announce our weekly topic very soon. Please stay tuned with us, and please do follow MarginX for future updates. So peace. Thank you, guys.
Cheers, bye.
Okay. Bye.